Welcome to Markets Now. I'm Michelle Rook, along with Brad Kooima with Kooima Varilek, and we're seeing mostly lower prices in the livestock futures, grains, row crops to the plus side. Wheat is lower. And Brad, let's start off with the cattle market. Some pressure again here. We've been in correction mode. How much more of a correction do you think we're going to see here? And is this a healthy correction?
Well, sure. Thanks for having me on, Michelle. And I always like being the fun guy on this deal, and it's been really fun to be bullish, as we have been here for a long time. So I'll give you a little spoiler alert. I'm kind of coming off of that bus here. I have to, we can talk the fundamentals, of course, too, which I would rather. But technically, when you have a reversal like you had last week, I mean,
Right. Key reversal.
A big time outside day, follow through the next day, all the parameters, checked all the boxes of what a reversal is. If you're not going to at least pay attention to that, then why do you even own a chart book, or why do you subscribe to a charting service? And so you have to be somewhat sensitive to that. And I guess I thought yesterday I thought, okay, a nice up day. And I thought today was going to be more of a definitive kind of a day. I was actually rooting for a higher opening, and then maybe we could have traded off of that, but they're not giving us that opportunity. So anyway, I am viewing the August and October that they have put in their spring high, short-term top. Do I think it's going to go down a million miles? Not at all, because we're such a discount that, you could break cash $20 and not break the August futures very much. So having said all that, I'm having somewhat of a standoffish. I'm in a bit in a hedge mode here in the August and October contracts. And it's because of, you've got more cattle coming in the summer. Yes, we killed all the cows, but we put all their calves on feed. Demand changes when you get on the other side of Father's Day. Okay. You go to a hamburger hot dog type feature, and you go to that sluggish demand period in there. So, again, I'm sorry if I disappoint you that I'm not as bullish as I always am, but that's the way I look at it. Now, in the here and now, in the short term, what are you going to do with June cattle? They're too cheap compared to cash. I don't think there's enough cattle to break the market the next 2 weeks. So I don't, the argument of why the June cattle have to be here doesn't hold water for me. I think the June cattle look like they're a little undervalued. So.
Right. And this has been a cash-led rally. We had a record price last year last week on the 5 area weighted steer, 188.75. But do you think we'll be higher again this week or not?
Yesterday morning I'd have said steady higher. This morning I feel like steady, maybe, kind of a steady soft deal. I think there'll be some cattle that bring 190 up here in the north. But it feels like it's going to be just a little bit of harder work. I do think the Packer did get some inventory around him last week. He may not be quite as short bought as he has been the last 2 weeks, which is going to maybe, take away just a little bit of our leverage. But generally speaking, shoal is still small, and particularly in my area. I mean, middle of June, typically we'd have 4 or 5 times the amount of cattle on the shoal list that are on the shoal list now. And that's because we're pulled forward. And that started already last year with the high price feed. It continued right through the winter, which was brutal. And now we like the price, so we can't wait to sell them. So those characteristics are very 2014 like, getting very, very current. That's why I think it's going to be hard to really wreck it when you're this big of a discount. Still looking low for the next move in the back months to be just a little lower.
But the reason the Packers got inventory around them is because the negotiated totals last week were almost 110,000, some of the largest of the year, right?
Yes. Don't tell me it doesn't work to negotiate cattle. Don't tell me that the relative price of cattle isn't impacted by the number of cattle that we negotiate. It is as obvious as a goat's rear end on a hillside. This last round here, when we upticked the number of negotiated cattle and saw these formula give in, turn in, give up, whatever relationship cattle, call them what you want to, but ones that Packers don't have to bid on. I absolutely am convinced that was the real difference maker here on this rally, was when you had Packer that had to come out here and competitively bid for cattle rather than have all the formula stuff.
Yeah, and all the way into last Friday for a fact. All right, what about boxes? We've been on fire there, but with what you just said about the seasonal demand, are we about ready to top that market too, you think?
If you look at a seasonal book, 2 things happen this time of year: weights bottom and box beef tops. I guess we'd all go broke if we traded nothing but seasonals, okay? But that would certainly be the expectation. Now, I'm curious about the weights because we are so current. But in terms of the beef market, I would think it would just be natural to expect, especially the middle meats, to see some decline. They're not going to get featured as much. If it doesn't, then I guess I'll fall back on the one good thing about COVID. And the one good thing about COVID was we taught a generation how to cook its own steak. And that generation found out you could do it 2 or 3 times a week instead of going out once a week. That was kind of the anomaly of the summer of 2021. We'll see. Maybe that'll hold us a little bit better. But I would expect coming off these levels. And don't forget, if the packer gets these fats bought just a little cheaper, don't be surprised to see the top end come off the beef market too.
Yeah. Hog setting back. We had a big update yesterday, and we've had a pretty good rally off of the contract lows. But do you think this rally has much more steam in it or not?
Well, trading hogs should have a warning label. Okay.
Exactly.
Yeah. Straight down and then straight back up for $17 worth. I think we over responded probably to the Prop 12 stuff. Probably under responded to whatever it was that, when the government had that little buy-in. Now we're so severely overbought though. And for me to see that there's something vastly different than there was 2 weeks ago is going to be difficult. I would think that the next move here is going to be some pressure. You continue to have this relentless supply of hogs coming. You continue to hear stories, I do anyway, in my neck of the woods about liquidation. And that liquidation stuff is not good, of course, because it adds just more tonnage to the market. So I don't know. If you're a hog guy, I'd be a little careful here. It looks to me like we maybe just had our little summer rally. And I think you got to work through a lot of hogs the next 60 days.
Yeah, and the funds probably covered a big chunk of that short position they had on that rally too. So that's the other ammunition that we don't have now, right?
You're right. Well said. I should have mentioned that. The fund was the big position there with the monster short, and now you finally ran them in. I thought the funds were the big buyers yesterday on the cattle, by the way, too. Also protecting their long position. Yeah.
Makes sense. Okay, we're up in the corn and soybeans because of the drop in crop ratings. It's continued to be dry. This El Nino pattern has not materialized as soon as we thought it was going to. How much upside do you think we have in this market, Brad? We took out, 550 on December corn, but how much more upside is there? We got stopped out at the 100-day.
Yes, and I thought taking out that 548, 550 area was important. Trading weather markets are very difficult, at least for me. And so usually I tend to lean on my chart book more than I normally would, maybe. And between taking out 548 and then gapping higher last Friday, we think the thing projects to someplace around 575 to 580 basis to December corn. That's what a chart book would say. I do not know what this afternoon's weather forecast is going to say, however, but you're right. This dialing in that it was going to start to rain, we were going to flip this switch the middle of June magically and change the pattern, which seemed like a reach anyway, didn't it? And now we're finding out that the rains are still not general, still spotty, still areas, particularly in the eastern corn belt, Ohio Valley, that are getting, it's getting serious. And and other areas as well. But so that's what I'm going to say, projected up into that level. My inclination is to still sell rallies. You're getting a little help from the crude oil too. Corn is not terribly competitively priced in the world market. We've lost demand. There's no doubt about it, both export and feed demand. So yeah, we'll see. I don't know what the weather's like, but I'm inclined to more like lean into these rallies a little bit.
Well, soybeans, let's talk about that one because that's not just weather, really maybe isn't a lot weather. That's about soybean oil and what's been going on there, isn't it?
Yes, that certainly is. And I don't know, this renewable fuel thing too has kind of gone under the radar. That's 14th when that comes up that's tomorrow.
Yep.
How come nobody's talking about that? I guess hopefully that's all going to be good. But canola, bean oil, crude oil, palm oil, you got a lot of stuff going on there. Yeah. And the old crop today is leading the charge. It was weird yesterday that it wasn't, so I don't know how much to buy into that old crop story on the beans, but I'd say give the market a little room. The old guy in the room on this conversation here, Michelle, sees that the public usually struggles with weather markets. I would encourage you to be conservative. How's that for a commodity broker saying a little bit of room here to the upside, but I would be conservative in your expectations.
Okay. I think we just unwound those spreads yesterday, why July was down as much as it wasn't. We have a lot of the elevators that have rolled from July to August now too?
Yeah, and a lot of elevators also have rolled from July to September.
On corn.
Basis here, we should talk about that a second if you got a minute.
Sure.
Basis here has changed quite a bit on the corn, and we were the strongest area in the universe, 90, 95 over. Some of the ethanol gang is down to 60 over. There's places within 100 miles of me that are 35 and 40 over. Still very positive, very strong, unusually so, but not anywhere near it was. It seems like you got a commercial that says, okay, I got enough inventory to get me close to new crop, and I'm not going to gamble on get caught with this more high price because of basis inventory as we transition into new crop. So it'll be interesting to watch that play out.
Yeah, I thought it was just in time buying is kind of what we were seeing. All right.
I would say that's right, which puts them at risk too, right? I mean, if they're wrong, but I'd say generally that's not bullish to see that basis decline like that.
Sounds good. Thanks for joining us. That is Brad Kooima with Kooima Varilek Markets Now.